So testing, 1, 2, 3. Testing, 1, 2, 3. 1, 2, 3, 4, 5. Doesn't sound right to me. It sounds all right to you? All right. So apologize for the slow start. Something popped up about an hour ago that was completely unexpected. So I guess life is exciting. All right. So what day is it? I always have to double check. Today is Wednesday, May 27th, 2015. This is your daily Forex trading strategy session brought to you by TradersWay.com. Thank you for being a client. Let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance does not predict future results, so always stay small, humble, focus on the long term, never risk money you cannot afford to lose. So, right before my distraction, you can see that I was trading. I guess that's what I do, right? You can see this level over here. Very nice. So up in here, price reacts to it, right? Makes a low, retest the low for a nice short, great. Makes a new low, profit, cha-ching. Comes up, and you can see, because I was distracted, I didn't adjust or anything. And on this particular trade that you see, I didn't quite get put in. But logic. And I suppose it's good that you can see that that's what I do even when you're not watching, right? So you have this, double topping right where you'd expect it, makes a new lower low. What do? The old support becomes resistance, which is a great entry for a new short. Creates a new low. Previous support should become resistance, which it does. Okay, area of concern is obviously going to be support. Pretty simple, right? Yeah, the question is, do I have advice for trading a 1 minute chart since I traded the 1 minute chart for over a year? The answer is yeah. The biggest advice I can give you for a 1 minute chart is I start on the hour or 4 hour chart first. Okay? And so I'd identify my trade zones on the 1 hour or 4 hour. Maybe it's a daily 5 EMA, and I choose what I want to do, but then I drop into a 1 minute. So again, the most important. All right, so what set this trade up? So I'm trading a 5 minute chart, right? So let's try to put this into proper order. So instead of a 1 minute chart, I'm using a 5 minute chart, but this could be a 1 minute chart. In fact, I used to like 3 minute charts. Okay, but anyways, I would do the exact same thing here. Okay, so I'm trading a 1 minute chart, but what puts me short? Why was I aware that I wanted to short in here? Not just bias, but what else is going on? Time frame, right? So actually for me, it was this. Zoom in, I know I've got a lot going on. Okay. This is what gave me permission. Here. Okay, plus I'm at resistance, right? So I look at that, you know, a couple hours ago, I'm looking at that and I say, boom. We're talking about 1 minute. Let me back out here. Okay. So up in here, I know what my strategy is, right? I'm going to sell. What is it? An hourly cycle off of resistance. Good job, Nuno. Well, I've taught you well. The apprentice has become the master. Yeah. Welcome to the dark side, Nuno. May the pips be with you. So that's how you put that together. Okay, so even if you're 1 minute chart, your decision should be made on a higher timer. Okay, it should look clear there, all right? I mean, does this 1 minute chart look like chaos to you? Because I used to be told like it was a universal truth that you just couldn't trade a 1 minute chart. Oh, it doesn't look. Really? Or, I mean, logical. It looks, I should be careful. I'm not sure if I asked the right question. Does this look logical to you? Does it look tradable? Okay. It is to me, yeah. Okay, yeah. I wasn't sure if I asked the right question or not. Yeah. You know, and there's lots of ways you could be doing it, right? Like one of the themes that I've been sharing with you guys again recently was the 155 Ross, right? I've done several videos on it lately. Following that up with the next, you know, the next move, right? The next high cycle is another one of doing it, right? Maybe that's an opportunity. Maybe that's an opportunity, so on and so forth. Maybe that's an opportunity. Another one that I like is just pure price action. This area should become resistance in the future, right? That's why you see I have that my entry, and I missed it by a few pips. Now, normally, you know, I'm paying a lot more attention. Hang on. Okay, but it's. I guess this is good, right? With not right. I didn't clean my charts off and stuff for you, so you can just see that's just trading. That's how it's going. So maybe there's a good lesson in there as well. Okay. So you can see the previous trade, I would have had it like this. Okay. Let's say it's something like that. Okay. All I'm doing is once it's made this low, all right, once we're on here, my next trade I'm setting up here. Remember, if I'm selling, how about, let me rephrase it as a question. If I'm selling, am I waiting for red candles or green candles? WWWD. What would Wayne do? Yeah, I'm waiting for green candles. Weird, right? But if it's made a new low, I immediately, and this is the same thing, you know, you're supposed to yell hammock, right? Right? Hammock! New low. We just got out of range, right? So you go crazy and throw down a hammock. That's the red alert. If you didn't catch those videos in the past, we're programming our brains like a drill sergeant teaches you how to man your battle station. And that you should be able to be woke up at 2:37 in the morning while you're fast asleep, and you have to jump out of your hammock, get your boots on, run down the halls of the belly of the battleship, and get to your battle station. And you've done it. You've done the drills day and night for so long that you can actually do it with your eyes closed. And the mental picture is you jump out of the hammock, and the next one is ducking your head under the steel door. When your eyes are still closed, you can run all and duck your head under the door, and then climb up the ladders and get to your battle stations, right? And for us as traders, as soon as you make a lower low, you use that old support, your resistance, and now you have your new sell zone. Okay, and that's where you run to your battle stations. You can do it with your eyes closed. And right up in here, you're looking to sell again. Okay, as soon as it makes a lower low, easy, right? So what are we doing now? That's a lousy, no good, stinking 1 minute chart. Doesn't look like pure chaos to me. But that's what I was told. And I refuse to believe it, of course. How does that make you feel emotionally? So we've been doing these events now for what? Is it becoming clearer? Like, can we look at this 1 minute chart and suddenly it looks repeatable? It looks tradable. It looks organized and logical. Yeah, Mike, it takes time, Mike. Remember, you only started. We even though you had a couple of years of trading experience, we've erased them because there were a couple of years of batch trading experience. So the problem with that, Mike, and you know, so it's no fault of your own, I don't think, but you have to unlearn all the bad things now before we could. So like if you and I met each other and it was your first day of trading, you're like, hey Wayne, what's a chart? What's a pip, Wayne? We'd probably be farther along in your trading development, right? But we have to erase all the bad things to get you back to break even, sort of thing. It's like this, Mike. It's like if you lose 50% of your trading account, percentage-wise, what you need to do to get back to break even. If you blow out 50% of your trade account, what do you need to do percentage-wise to get back to zero? Yeah, you got to double it, yeah. Well, Mike, the only thing that I'm asking you to do, and I know you know this, but just for everybody else, is to just regain focus and control, and by just trading in the direction of a bias. Now, I think we have you doing weeklies, right? You have a weekly bias now. Is that right, Mike? So you flip a coin and you say, all right, this week is a bear. I'm a bear, that type of thing. And if so, I think that's supremely important, more than anything else. And then if you're a bear, you identify levels of resistance. So like if I'm a bear here, I'm only selling. Can I sell now? No. So it should be fairly easy. If I can't sell now, where would I sell? I could sell in here. Okay. Can I sell below? No. I can sell it if it's up here. So I can say to myself, if we come up here, I'm going to sell it, right? And of course, the stop would be here. Okay, well then, how are you doing with your support and resistance? So like, you know, again, I'll start on an hour. Let's go through the logic again, guys. I start on an hour. Well, how about this? What's my bias? I guess we'll do 4 hour. What's my bias, guys? Okay. Now, fundamentally, I was a bear, but we went through almost a month of bullishness, right? So all I could do was wait to sell. And then we had a guess up here somewhere that the market went bearish, but it hadn't turned bearish yet, right? So it does this, and we get our bearish. You can still see our, right? So in here, we are confirmed bears. Confirmed. Now, technically, the market on a 4-hour chart is bearish in a fundamentally bearish bias. Fundamentally, right? Okay, good. Move to the next step. So the first one was the fundamentals, fine, but everybody gets that. Everybody loves the technical part, so now it's now technically aligned on a 4-hour. Do I just throw down a sell? Well, you could have actually several days ago. But I'm trying to drill down to pulling the trigger, right? Because isn't there sort of a gap between technical bias and actually pulling the trigger? There's a gap in there somewhere, right? So a lot of people are just scalpers, and some people are only like swing traders or position traders. But I think you need you sort of fill that gap in there. There's knowledge in between, right? And so the next part is, if I'm a bear, technically, now I need to be a bear on a hourly chart. Or to say it differently, I don't want to sell if the hourly is rising. It's like a headwind, right? What do you have to do if you're out at sea and the wind picks up and there's a big storm? You got to drop your sails, right? So anyways, I'm kind of using this like, I don't want a headwind, tailwind. Okay? I want the wind blowing behind me, right? So as this is rising, it's not an ideal time to sell. So as it's rising, I'm kind of waiting for it to get up to here, okay? And this is where I say kind of, I need permission, because what I'd like to see is the Stokes now on the hourly wanting to fall. More important than that, wanting to fall while I'm at resistance. Okay. Now, because it's such a big pullback, I'm only expecting a range. So we're kind of already made the move, but we have the full oscillator yet. So anyways, so that's the second part. Do I have permission? It's like aiming. Okay. Okay, so when it's up here, the assumption is it's going to roll over to the downside. That's the assumption. I can start when it's in this area. I can start preparing. Also, what happened 1, 2, 3, 4, 5 or 6 hours ago? What happened? London Open. So like, what's the difficulty? That's the part I don't understand, right? We're fundamentally bearish, right? Fundamentally bearish. We got our technical reversal that took like a week to develop perfectly to get a technical bias that's bearish, right? That's the 4-hour sort of head and shoulders type thing. But that takes, that takes a lot of patience, right? I mean, we're not outsmarting the market at that point, right? It's just, it's done, it's reversed where we thought it would reverse and how we thought it would reverse. But at some point, you have to agree that fundamentally, on a 4-hour chart, we're extremely bearish, right? Right? Can everybody agree to that? That we have achieved that to the extreme over the course of a lot of analysis, right? You can see the change in channels, right? One channel is kind of going up. Now the new channel is down. The pattern kicking off the 21. And I mean, there's just so much going on here, right? But it's all bear. So what's the best time of day to place a trade? If you were going to be in a trade all day, you're going for the full average daily range. 100 pips isn't quite enough. If that's all you got, you'll be slightly disappointed. That would be pre-London. Now, pre-London's a bit choppy though, right? It can slice you and dice you a bit, right? Up, down, turn around. Right? But what if you already have made your decision what you want to do? It's going to be a lot easier, right? What if you woke up in the morning and you say, I wonder if I'm going to get the opportunity to sell London today? Would trading be easier? Like, you're not trying to figure it out, right? You're like, what am I going to do today? I wonder what's going to happen. Oh, it's spiking up, but it's a fake out because we get the pre-London fake out. But then if you actually look at it, sometimes half the time it fakes out and the other half the time it doesn't fake out. Maybe the only inconsistent thing with the London Open is your trading, right? But I hear all kinds of things. Oh, well, this is the pre-London fake out. Like, well, how confusing does that get? Right? So when you have already made your decision on a 4-hour, a daily, and fundamentally, then when pre-London happens, right, before the London opens, let's say 2 or 3 hours before the London Open, what if you already knew what you wanted to do? And my argument here, and again, we were preparing for this before it happened. When it was rising, we were waiting. And then when it was setting up, we were waiting. And then we finally got the low lower than this one. And that's the YJ shorted that. I remember, I don't know why I remember YJ doing that. I guess because we had directly, and then he actually did it, right? But anyways, so, there's just, it's so there, right? And you could see even here, I was drawing a reversal pattern would look like in the future. I mean, look how close it is. I mean, if it's teachable, it's tradable, right? So in this point here, what I'm asking you to do, say it in so many words, but in ways so everybody's going to get it. You need to be fundamentally or technically a bear. It's the equivalent of Mike flipping a coin, and it says, you're a bear. Good. You cannot buy. If you buy, then the Forex police show up, and you're thrown under arrest for negligence. Criminal negligence. And you don't want that. Okay? Okay, so there you are a bear. So what are you going to do today? Would you use a 4-hour chart to decide what to do today? Well, no, because you've used that to develop a bias, but it's not necessarily putting you into the trade. One thing that I do use on the higher time frames, like the daily and the 4-hour, is I'm just looking at where the moving averages are. And sometimes I'm thinking, like, as we move sideways in here, I'm thinking to myself, we're waiting for the 21 to catch up. Okay, but it's still not going to put you in a trade at that second, right? Okay, so anyways, the 4-hour is to set your, does anyone remember the name of my book? Don't worry, I'm not trying to get rich selling you my book. The publisher gets rich. Okay. Strategic and tactical Forex trading. So this is the strategy part, strategic part. All this does, this whole chart that we set up this whole time, remember, fundamentally I was a bear, right? Was I telling you to buy in here as this went up over again day after day after day? No, not really. Right? Not really, not on the longer term. And then when we're in here, this is where we were waiting for it to roll over like an old man easing into a hot bath. In this new area, this is where you are now supposed to trade. This is where it's a bear's market. Okay, good. So you wake up in the morning, I wonder if London is going to give me the privilege of selling. That's all there is, guys. Right? That strategy's done. What's the strategy, sir? Sell at resistance when it's overbought. Right? There are rules of engagement. Right? You can't just walk into town and start shooting. Not everybody's a bad guy. You have rules of engagement. So what's the rule now? Well, sell, that's it. There's no buy. You can only sell at resistance, ideally when it's overbought. Okay? Time of day is important too. The clock is probably the most advanced part of trading. It's the last technical indicator that people tend to use. But once they know how to use, you know, moving averages and oscillators and price action and all the other kind of technical tools, then you refine the trader's capabilities and performance by teaching them a clock. It's amazing. But at this point, you move to the next step. It's simple, right? Pre-London, are the conditions proper? So here's pre-London, right? Remember, 1, 2, 3 hours before London. Is that enough time? Because we are talking pre-London, right? 2 or 3 hours before the London market opens. That's reasonable, right, guys? So at London, you look at your charts, and I'm asking you basic things. Are we at resistance? We have that marked up. Is it overbought? Yeah. So you should say to yourself, over the next few hours, I should be short. So it's like permission. Okay. Do you pull the trigger here? Well, if you pull the trigger here, it takes 2 or 3 hours, right? Let's say a couple hours before you're going to get the opportunity on this 1 hour. Is there a way that you could refine your entry to be a little more precise than waiting 2 more hours to get a 5/8 cross? How could we possibly get in a little bit earlier? Okay, closer to resistance. Jump to a 5-minute chart? Okay, well, my favorite's the 15. So at that particular moment, guys, at that particular moment, we're sort of in here, oscillator-wise. We know this is resistance. And we know this area up top is the London Open. Well, Ken says to safe, go to the retest. Well, very often you don't know that that's happening. But because it's a new hourly cycle, the hourly chart hasn't cycled down yet, right? So, yeah. But I think that's a little more advanced, okay? But you're right, because it's going to come down. You have to bend the 21. So, you know, if it's going to go down, we're going to have to get a reversal pattern. And then we're going to have to test the 55. And then it's going to make a lower high, lower low. Okay, fine. Or, which I think is more realistic for most people, is, you know, you end up short sort of in here. Your stop is up here. Okay, and your limit is down here, right? So I don't know, you do like a 33. Okay, it's a swing trade, right? We're going to be on all day. So how about a 33.99 OCO? Okay. 3-to-1 ratio, good for everybody? So this is pre-London. How often do you think the London market creates either the low of the day or the high of the day, depending on the direction? So that's why I'd play it that way. If I'm wrong, I'm going to lose 33 pips, and I was wrong for the entire day. It's the equivalent of flipping a coin, and this is bear, and you're a bear on a bullish day. Okay. Now you're technically the market's bearish, fundamentally the market's bearish, but you know it happens, right? But you know the hourly is way overbought, 15-minute is way overbought, and yet the market's falling. You're a bear fundamentally. Technically on a 4-hour, there's been a reversal pattern. And now in the hourly, it's bought, the 15 minutes way overbought, yet the market is technically and fundamentally bearish. Seems like you could sell it, right? Isn't that our job? When the market is incorrect, your job is to set the price properly. The market is price, the currency, the asset is overvalued. So your job is to revalue it appropriately. You're supposed to sell it. Yeah, you know what, Mike? Without, being able to roll up my sleeves and do detailed work, which is, my time's very limited and expensive. Like I get upset shopping for the family. I bought some stuff just the other day, and my wife's like, it's too, I bought a tent, right, to take the kids camping. Great. I'm Canadian, right? Growing up camping is a good thing. All right, let's get a tent. And I got one that was too big and too nice. Whatever. I tend to do these. And she's like, take it back. I'm like, but, I spent all this time in it, and just my time to take it back is going to be like $1,000. Like, are you sure you want to take it back? I mean, I only got so much time. I mean, my time's expensive, right? I mean, all right, I'll take it back and buy the smaller one without all the fancy gadgets and upgrades. So anyways, without too much, I'd like to help Mike, right? And it might sound like a shameless plug, but, buy my book, dude. I wrote it for a purpose. And half the book is how to keep a journal properly. Keeping a journal, like you said, you did that for a while, it's all gibberish and it doesn't mean anything. Well, that's what most people's journals are like. I agree with you. And that was sort of, so I wrote down everything that I went through to become a better trader. And so I literally documented my best advice to you. I don't care if you buy it used. I don't care. I'm sure you could probably find some hackers scanned version. I don't know, right? But I don't care where or how you do it. But try that, man. It's not. I'm not going to earn a penny from it, right? But I am telling you, right? Right. I am telling you that there is a part dedicated, like 1/3 of the entire book is dedicated to keeping a trade journal and how to use it properly to identify your strengths and weaknesses and practice and stuff. And so I don't know what more to say. It's the reason. I wrote it for you, Mike. And I have carpal tunnel syndrome from writing that book. So I have scars permanently. But it was worth it. So I don't know, right? The only thing better is to charge you, I don't know, 5 or 10 grand and work with you one-on-one, but I don't think I have the. Okay, so new lower low, guys. So here's what I would do if I were me. Oops. Okay. It's a little tight though, but you never know. Oh, and I wanted to double check something. I use an EA for this, but I just wanted to show you what I'm doing logically. What am I doing? Oh yeah. Okay, I'm going to remove this. Okay. All right, so one thing I do to save a little bit of time, because when you enter a trade, you want to always have your stop and your limit, right? So we want to have a 33 pip stop and a 99 pip limit, right? So now you have to calculate that. So 33 pips, it's a short, so the stop is going to be above price, 108.60, so 106.93, so you gotta go 108.93. It's actually 94, right? And then the take profit would be basically it's 99 below 108.60, so you gotta go 105.60. You know, you see what I mean? And you gotta calculate. It's time, right? See, I don't actually want to be in. See, you know, I want to sell it like this, not so I'd just be scalping. So it's no longer a swing trade. But all right, so let's go back. Okay, so let's go again. So let's say I want to sell here now. Stop 33 pips above that, limit 99 below that, and it takes a bit of time, right, to enter it, to modify it, to calculate what that is, to adjust, blah, 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 blah. So I do an easier version of it. So I throw down my limit order. So if price comes up, I'm going to want to sell that. Okay, ideally the oscillator is going to look like this. That'd be most ideal, and we'll be in the 382 short. Right? But to save myself some time, I use an EA, and this particular one's called Auto Stop. There's millions of them available. This is the one I like. So I have it set like this. Stop loss, 33 pips. Profit, 99 pips. Done. And up here, it should say auto stop with a happy face. If there's a happy face, the EA is running. So, if price comes up, triggers this working order, it's a sell limit, working order gets converted into an order into the market, I will now be short. That's just a working order that says I work. If that order gets filled, it'll put me short, and then immediately the EA will calculate where 33 pips is, where 99 pips is, and it'll throw in that OCO order. So if one is triggered, I'm taken out for a loss, and this one's canceled. If this one comes down and gets triggered, I get taken out of the market for profit, and the stop order is canceled. So I never leave a limit or a stop by mistake. So it's not to place an order, it's to enter the OCO and, of course, calculate the pips so I don't have. So I'll set this up. So like, for example, how to manage your trades or your trading chart. I have 18 screens. They're 22 inches wide, high resolution, high flicker rate, rectangle, flat bezel, no curves, so that they stack. Okay, and so you can have you can have each window set up with multiple currency pairs, or you could have this currency pair on this time frame, and you can have the same currency pair on a different frame, and you can have EAs already lined up for these things. so that you can go to your swing trade setup and know that you already have a 33.99 setup. On a 5-minute chart, you wouldn't want a 33.99 OCO, but sometimes I've done 10-10s, I've done 25-25, 10-20s. Okay. What I mean is a 10 pip stop, 20 pip limit. And when I'm in a trader's mode, I can throw down boom, 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 bunches of trades on a small time frame because the market's moving. I'm bearish for 90, so I can drop into a smaller time frame and trade, just trade, and throw down lots of little scalps in the direction of my fundamental bias. Okay, and already have everything predefined. Do you see what I mean? It's so you again, you could have one screen filled with 10, 20, what I call putts, right? You can have putts, and then the other ones are drives. If you understand the golf analogy, that'll make a ton of sense. So this would be a legitimate trade here, the one that I have set up now. Okay, because what I'm looking for now is the 15-minute oscillator to be overbought. But like I said, I think the proper trade for the day was up in here. Done for the day, guys. 4 hour, 1 hour, 4 hour strategy, 1 hour permission, 15-minute for the trigger, 33.99 OCO. You would have been short around 109.20. So that puts your stop up at 55. Oh, look, it's marked. 109.55. You know, just hypothetically, right? You'd be in about 20. Your stop would be right about there, which is just magically already marked, right? And your limit would be 108.20. Well, we have 30 more pips to go. Okay. Yeah, it's more like 70 with the spread and slop and all that kind of stuff. But I think you understand, right? The logic being here. Now, someone asked who it was, but you know, waiting for the second move, Virgins would have been better, but I can't expect you to get that. That's pretty advanced. But what you should be doing is selling at resistance when it's overbought in the direction of your bias, right? That's what I want you to do. And give yourself a reasonable stop and give yourself a reasonable limit. I can't, it's amazing how people start taking profit early. Oh, but I got 30 pips. It's so much money. Well, yeah, but it's going to move 120. You should be embarrassed. Why would I use that as resistance? Okay, I have it marked. Support, support, resistance, resistance, right? Yeah, absolutely. Now the next one is you want to be selling in here. I already have it marked up. But you have to also realize that in 4 hours, the day is over. Right? So how long is it? It's going to take 2 hours to get this to come up. So our shot is it's going to do this and then maybe down, but I think what will happen is it'll do this. But I don't know. My job is to be ready. Okay. Now look at how many opportunities you had to trade this today, guys. Okay. You could have sold it off the top. We all know that. Then when that was breached, you could have sold that, this retracement. Okay. I know you only had an hour to get ready, but you could have done it. And then once it made a lower low, this is going to be an area to sell in the future. Right? So it makes, as soon as it makes a lower low, then you draw this. It came back. Again, you only had 45 minutes to get ready. Probably too quick, right? So then it makes another lower low. What do? Old support becomes resistance again. This one was quicker. You only had a half an hour to get ready. Okay? And then here we are now. So the theory is this one you'd be up 75 pips, right? This one you'd be up 60 pips. This one you'd be up 50. This one you're up, what, 25? Let's say 25 and 50. We'll call that 50. So it'd average out to be 100, and let's say make that 70. So yeah, you know, 175 to 200 pips. Right? Right. Well, see, like what Oscar's saying is, damn, I'm only up 50. Well, those trades are there, right? What I'm trying to also drill home is, you know, we set up last week. And when the market's moving, that's when you need to make a lot of trades so you can get paid, right? But every time it goes, what if you had this one at break even? And then this comes down and you do a second chance trade here. So you take that one, short it, and then the third, and then this makes the low. So you enter another one, but this now you have, you know, you have, how am I going to drop it? So you're short here for your third. Okay. Your second one is you got your stop, and the third one, which was here, you have this one here. Actually, there's one missing. All right, so you got 4 trades now. This one, what you've done is this is where you entered the first one. Now your stop is here at plus, I don't know, I can't see what that is, plus 50. Okay, let's just say go with that. Then the second one, you're in, and it's stopped, and that one's plus 25. Okay. Your third one is here, that's why it's there, and that's at 0. The price is down here, and you're entering your 4th trade, right? So it makes a new low, you enter in your 4th trade, and then when it makes a new low, what do? One now is at break even here. Your second one is plus 20. Your third one is plus 45, right? And the other one is plus 75. And all the stops are in place right here. And you keep doing this over and over and over, what? You get wiped out. So now this one's made a new low. Here, if, oops, you mark this here, there's the old support. So if price comes up and then down, you'll sell again for trade number 5 right there. And then these 1, 2, 3, 4 stops all get moved to here. Okay, once it does head down, now you got this one at 0, number 2 at 25, number 3 at 45, number 4 at 65, number 5 at 100. Okay? And yes, it is called a pyramid, yes. But a lot of people do it incorrectly, and what happens is they keep trading even though all their trades are at loss. And that's just stupid. That's not pyramiding, that's suicide. Okay? That's one way of doing it. But I think the best way of doing this is like I said, sell it in London and go away. Okay? The trick of what I'm showing you is that all of those, if you're going to do that way, so that's how you make like 250 pips a day or something like that, right? You when you're right, you get paid. So let's reverse this for a second, okay? Okay. On the day that I'm right, you can do this, right? You keep adding and adding, move your stops, remove the risk, you're locking your profit, add another trade. Locking your profit, add another trade. Locking your profit. Okay. What about if I was wrong and it's slingshot up here? I lose 33 pips and I'm done for the day. Remember, I'm a bear. Why would I keep selling? It just made a higher high. I'm done. I mean, it's a bullish market today. I thought it'd be bearish. We were at a reasonable level of resistance. It was overbought on a couple of time frames. Didn't work out for me. Maybe some came out. It happens, right? So you're short here at 2 o'clock in the morning. At 4:30, news comes out, and boom, it's up here. So I take the loss. Cry me a river, right? But what if I'm right for the day? Well, you could do the 33.99, and I'd be busted out now for 100 pips profit. Thank you very much. Or this one has 100, this one has 80, right? And then you got this move here, and then you got this move here. So you have all these trades right now on this line, right? You could certainly have 4, maybe 5 trades on this. And all of them are profitable. And if one of them got knocked out, you both of them. You get it? So on a bad day, you lose 33, and on a good day, you make 333. This is the idea. But what I don't like is, I don't like, that it's doing this and you're still selling, or that you have trades open here, now they're losing because they're still open, and like, I never mentioned any of that. I keep saying, lock in your profits, add another trade. Lock in your profits, add another trade. Lock in your profits, add another trade. So, for example, I've been in situations where I've had 100 open positions. More than, a lot more than 100 open positions. How much floating margin, How much available margin did I have? With 100, over 100. It would have been 134 trades open, guys. 134 trades open. What was my available? And I've shown people this. I don't tend to do it very often, but it fit into a lesson I was giving one time. Okay? In a scenario like that, I typically have 99% of my margin available for further trade. I think it might have been 98, actually. Perfectly fair. I think I had. Why only 2%? Well, if it was 134 trades, well, 132 of them were profitable, and I had just entered 2 new trades that took up a total of 2% of the account because they were not profitable yet. I was probably 22 pips each or something. Okay, it has nothing to do with the amount of money in the account. It has nothing to do with the amount of money in the account. Every trade was profitable. How much available margin? If you had 1,000 trades open, but they were all profitable, how much margin do you have available? You have a floating, your equity is a floating profit, right? You have 100%. But why would you have 70 losing trades open? Less ideal is all I'm trying to say. Less ideal. And I'm not reckoning that you have 72 losing trades open, right? I'm saying move your stop to lock in profit, add another trade if you want, or don't. On a day like this, you could make 5 trades. I don't like trailing stops because what it asks you is how many pips would you like to throw away because you're not willing to do the work? Would you like to throw away 30 pips, 50 pips, 25 pips? What's your favorite amount of money to throw away? Right? I know I'm being a little facetious, but that's how I feel about it. So what I'm suggesting here is you get out when the market changes and you get out of everything. You get it? So like if this was a reversal pivot point, maybe it is, maybe it isn't. If I thought I could just kill everything right now, walk away, done for the day, I could say what? The average daily range, right, is what? 105 pips. Just moved 105 pips. And I'm on 5 trades, right? So, and we're at a reversal. It's not that, see, remember, the market doesn't give a damn about how many pips you have. It doesn't know your positions. It just knows price. So if you'd either be negligent or ignorant if you didn't take your profit. Okay? Make sense? And I would just bail on everything because that's what I'm supposed to do. If that's a week less too, well, that's what I'm supposed to do. And the law of averages takes care of everything else. Sometimes it'll break through, most of the time it won't. It's just supposed to do exit on that weekly S2, you got your full average daily range, it was a day. Now, your personal trading style, which some would call your alpha, your trading performance, whether you make 500 pips on a move like this today or 99. That's just the difference in trading style per se. Okay? But what I'm trying to teach, because I don't care about that, whether, you know, individual performance. What I'm trying to teach is that we set all of this up last week. That's that. And we spent 2 or 3 weeks setting up last week. And now we're having pretty big trading days, right? The ADR is going up. Why? Because fundamentally and technically, this market is congruent. Like I've been trying to tell you this whole time, it's been wanting to fall. We looked at Commitment of Traders report. Nobody was buying the euro. Not according to the stats. But people were, so the question was, well, if it's been going up like 1,000 pips, what are they going to do selling again? If the market's going up simply because sellers are getting out, but they're not buying, well, what would happen if they sell again? Is the wind in our face or in our sails? It's the path of least resistance. It's natural. It's what it wants to do. And you're supposed to be a cork in the life, or sorry, the cork in the river of Forex, floating downstream. Okay? Go with the flow, man. Don't fight it. Okay? Okay, guys, why don't we call it a day? It was a good overview of setting up a trade and, you know, trading it in various different ways. Sorry for the slow start. Like I said, and it looks like the thing that I was distracted by has been resolved, so that's good. So I hope it helps, that's all. Oh yeah, Ken, appreciate that. So I'm going to drop you onto youtube.com/c/TradersWay. Would you be so kind as to leave a comment on yesterday's video? Within 1 hour after YouTube is done encoding today's recording, it'll be available to you. If you subscribe, you don't get any emails from us. It just simply YouTube ups you every time we add one. And every time you log into YouTube, hey, do you want to watch a TradersWay video? So that would be another one. Okay, so thanks for your time today. Hopefully it was helpful, and I'll see you tomorrow. And then how about the next day too? I'm here for you, babe. Cheers.